money, magic and Maya, human psychology and investing. Part 2. Immediate US post-election euphoria has disappeared very rapidly in last 2 to 3 months since the end of January 2025. The euphoria has given way to anxiety, denial, fear, desperation, panic, and finally has entered the state of capitulation. Despondency may set any time. Based purely on human psychology of fear, greed, and herd mentality, I may say that either the time for maximum financial opportunity has just arrived or soon will arrive in the American and global stock markets and equity markets for immediate and long-term investors. In short term, what happens only God knows. None of the so-called pundits and gurus have the crystal ball or magic mantra of money. Like myself, they too are humans and not divine. I am a long-term, amateur, small-time investor in American equity markets since the mid-1970s when I started earning and saving my first dollars. I still have painful memories and scars of past American stock market crashes such as COVID-19 pandemic crash of 2020 when stocks lost almost one-third their value. During the 2008 crash, due to American financial crisis, stock market plummeted by half, 50%. During the dot-com bubble crash of 2000 to 2002, Nasdaq index lost nearly 80% of its value. 80%. On Black Monday, on October 19, 1987, Dow Jones Industrial plummeted 22.6% in a single day. 22.6% in a single day. Because I was almost fully invested, I was brutalized as well as terrorized during all these crashes. But I mostly hung in there for the long haul. I added to my long-term portfolio of broad-based index mutual funds and exchange-traded funds, ETFs, and US Treasury issues using dollar cost average technique, and resisted hard and sold as little as possible, if at all, that too for tax purposes. Investments are always my primary goal. Taxes are my secondary goals. Over the decades, my patience and persistence have paid me off decently, if not spectacularly. My long-term returns are neither spectacular nor shabby. My investments have kept up with inflation very gingerly, sadly. During the severe American stock market collapse of 1973 to 1974, triggered by Arab oil embargo, when investors lost almost half, 50%. I was not born when Wall Street crashed during 1929 to 1932. Investors at that time lost some 90% of their savings during that time. The magic, maya, and moha of money and other investment vehicles have always intrigued me since that day. I have become a student of money for life. Learning never ends, does it? In last half a century, I have studied the Dutch tulip crisis of the 1630s, the English South Sea bubble of 1720s, US oil crisis of 1973, Asian financial crisis of 1997, the Russian financial crisis of 1998, the great credit crunch of US of late 2000s, and the Japanese real estate and stock market bubbles of 1986 to 1991. Since the dawn of humanity, world history is filled with financial booms and busts, as well as wars and peace times. Humanity has always rebounded to higher and more prosperous levels in spite of so many of these setbacks. So also will this 2025 stock market crash and meltdown will disappear sooner than later in next 3 to 10 years. So it may not be a time to despair and throw in the towel. Let us hope and pray and be confident that what goes down shall also come up. Glass is always half full, not half empty. John Templeton, the visionary and legendary American value investor, was fond of saying the following timeless quotes. Quote, "Bull markets are always born on pessimism, grown on skepticism, mature on optimism, and die on euphoria. The time of maximum pessimism is the best time to buy, and time of maximum optimism is the best time to sell. To buy when others are despondently selling and to sell when others are greedily buying requires the greatest fortitude and pays the greatest reward. For those properly prepared, the bear market is not only a calamity but an opportunity." Unquote. John Bogle, the founder of Vanguard Group, is credited with popularizing the low-cost index funds. He preached investment over speculation, long-term patience over short-term action. His book, Common Sense on Mutual Funds, New Imperatives for the Intelligent Investor, has become a bestseller. Benjamin Graham, who is widely known as the father of value investing, he wrote the famous book Intelligent Investor back in 1949. His investment style stressed independent thinking, emotional detachment, and careful security analysis. He emphasized the importance of distinguishing the price of a stock from the value of its underlying businesses. Living legend Warren Buffett, nicknamed as Oracle of Omaha, CEO and chairman of Berkshire Hathaway, is considered as one of the most successful value investor of the 20th century. He's a long-term value investment investor who is known for his ability to identify undervalued companies and holds them for the long term, sometimes for decades, allowing their value to compound over time. He buys companies below their intrinsic value, anticipating that the market will eventually recognize their true worth. He lives in the same modest home in Omaha, Nebraska, USA, that he purchased back in 1958 for $31,500. Despite being one of the richest people in the world today, Warren Buffett still maintains a simple and frugal lifestyle. Written, edited, narrated, and produced by M.S. Patil, Beyond the Shadow of Doubt, from the very heart of Chicago, Illinois, USA. April 10, 2025. Thank you kindly.